The Black Friday and July event from Dell Technologies is here with great offers on trusted technology. You'll also discover huge deals on new AI-ready laptops, like the Dell 14 Plus featuring Intel Core Ultra processors starting at $699.99. Save on top accessories, plus enjoy fast, free shipping and other benefits. Upgrade today by visiting Dell.com/deals.
The Red Hot Clearance event is on right now at Burlington, and I'm excited for the markdowns. It's all about savings on top of savings throughout the store. This is when I stock up on styles for my closet, home decor, and much more because there's up to 70% off other retailers' prices on clearance. I mean, I'm going every day because these prices, too hot to miss. Burlington. Deals, brands, wow. Styles and selections may vary by location.
This is Optimal Finance Daily, How I Rebalanced Through Perilous Times by Darrow Kirkpatrick of CanIRetireYet.com. Quote, benign neglect bordering on sloth remains the hallmark of our investment process. Warren Buffett. To rebalance or not to rebalance? When? How? We've reviewed the sometimes conflicting and arbitrary advice of a number of experts. We found a vague consensus in favor of rebalancing, but we've also seen studies by respected voices questioning whether rebalancing adds enough value to bother. Now I'd like to show you my own personal rules for rebalancing. They don't require any tricky calculations, careful scheduling, or complex transactions. When in doubt, they prescribe simplicity or doing nothing over complexity or active management. What they may lack in precision or certainty, they make up for in safety and ease of use. These are the same rules I use to grow my portfolio and retire at age 50 with security and confidence. Let's take a look. Number 1, don't rebalance more frequently than annually and consider waiting several years. Consider never rebalancing in your taxable accounts. Research points to an ideal rebalancing interval of several years, if at all. By thinking in terms of those longer timeframes, you remove some risk that you'll act emotionally in response to shorter-term market movements. Of course, you still must choose the exact moment to rebalance, so that's a decision that will always be subject to emotion. So if you decide never to rebalance, it's good to know that there's ample evidence and authority to be confident about inaction, especially in taxable accounts. Number 2, don't worry about small changes in your asset allocation, where small means at least 10% and possibly even more in your overall allocation. Some of the most seasoned and respected experts recommend rebalancing only after very large changes in value or not at all. So there's no hurry. Be especially cautious about rebalancing in response to short-term market movements or during times of high volatility. You may find yourself rebalancing again before long, racking up more transaction costs and taxable gains in the process. Number 3, do most of your rebalancing during the course of adding new money, taking withdrawals, or reinvesting distributions by buying laggards or selling winners. Leveraging the natural inflows and outflows of your accounts rather than explicitly buying and selling shares saves you from several investing pitfalls, including trying to time the market, incurring additional expenses, and generating taxable gains. Buy low, sell high. In my personal experience, the savvy investing behavior that is easiest to adopt is buying what's cheap as new money becomes available for you to invest over time. It tends to be easier and more reliable to identify and buy what's clearly on sale now than it is to predict if and when it's time to sell your winners. Number 4, but when an investment, especially an individual stock, sector, or asset class, has delivered 2 to 3 years of double-digit returns, expect it will revert to the mean or beyond and sell some if you want. It's an unfortunate fact of investing that for all but the simplest of portfolios, you must remain alert to bubbles, whether they be .com, real estate, commodities, or something else. Don't completely ignore volatile asset classes for years at a time, or assume that 20% returns in one investment will go on forever. They won't. My biggest investing mistakes were not selling hugely successful and overweighted positions, which later reverted to more average values. I would have done much better if I had the humility to sell when I was way ahead. But I lived to tell the tale, and so will you, if you don't fall into the trap of throwing more money at those positions late in the game. And number 5, as with choosing your individual investment holdings, consider diversifying your rebalancing strategies, the when, the how, and the if. Don't rebalance all at once. It's not possible to pick the optimal date for rebalancing, so spread out the risk. Rebalance in modest chunks spread over longer time intervals. Consider owning some investments that rebalance automatically on their own schedule. This is one area I see value in some professional management, ideally a low-cost balanced fund that automatically rebalances to some target asset allocation on a regular basis. A professional manager guided by a clear asset allocation strategy, such as 60% to 65% of assets in common stocks and 35% to 40% of assets in investment-grade bonds, goes to work every day to monitor and implement that strategy in the most cost-effective way possible. Just be certain that the expenses charged for this service are razor thin, as they should be. It's a valuable service, but it's not active management. Even though I've managed a large portfolio for years, investing is not my full-time job, nor even my main interest. I simply don't expect to find the perfect rebalancing formula across my entire portfolio on a continuous basis over the long haul. That's why Vanguard Wellesley Income, a conservative balanced fund, has been my largest holding for years. If I had to do it over now, I might choose Vanguard's Balanced Index Fund or Life Strategy Moderate Growth Fund instead, both passively managed. It's well worth the small fee that Vanguard charges, 0.18% in my case, to hire a full-time manager to implement a consistent rebalancing policy as part of my overall rebalancing effort. In conclusion, assuming you began with a diversified portfolio, don't fear inaction. You'll sidestep a number of potential investing blunders that way. The majority of my own rebalancing strategy, as recommended by experts including the legendary Warren Buffett, is characterized by benign neglect bordering on sloth. You just listened to the post titled How I Rebalanced Through Perilous Times by Darrow Kirkpatrick of caniretireyet.com.
Rated T for Teen.
Each year, thousands of adults lose their shred. It's an epidemic simply known as shred loss. But it doesn't have to be this way, because rekindling your shred is as easy as playing the new Tony Hawk's Pro Skater 3 and 4. With new parks, cross-platform multiplayer, and sick new game modes, we can put an end to shred loss everywhere. Get the new Tony Hawk's Pro Skater 3 and 4 and show the world that the shred's not dead. Pre-order Tony Hawk's Pro Skater 3 and 4 and play the Foundry demo.
Imagine you're a business owner who has to rely on a dozen different software programs to run your company, none of which are connected. And each one is more expensive and more complicated than the last. It can be pretty stressful. Now imagine Odoo. Odoo has all the programs you'll ever need, and they're all connected on one simple, easy-to-use platform, giving you peace of mind that your business is always being taken care of from every angle. Odoo has user-friendly, open-source applications for everything. We're talking CRM, accounting, inventory, manufacturing, marketing, HR, and everything in between. Basically, if your business needs it, Odoo's got it. Odoo sounds pretty amazing, right? So stop wasting your time and money on those expensive, disconnected platforms and let Odoo harmonize your business with simple, efficient software that can handle everything for a fraction of the price. It doesn't get much better than that. So what are you waiting for? Discover how Odoo can take your business to the next level by visiting odoo.com. That's ODOO.com. Odoo, modern management made simple.
I find many people ask more about which specific investments they should choose versus which asset allocation is right for them. But especially if we're investing in index funds, what really matters is our portfolio allocation mix of types of investments like stocks, bonds, and REITs. The reason is because all reasonably well-diversified 100% equity portfolios are going to perform at least 90% the same. Likewise, all reasonably well-diversified 80-20 or 60-40 stock to bond portfolios are going to perform at least 90% the same. From my perspective, the purpose of having bonds in a portfolio is to smooth the ride of volatility of the stock market. This is super important as you get closer to tapping into your portfolio. You don't want the value of your portfolio to be highly volatile when you're drawing down from it. But if you don't plan to touch that money for more than 10 to 15 years, it seems to me that smoothing volatility is more about the emotional benefit of not watching wild swings with your money. For me, I've solved for this by keeping a strong cash position and not watching my investments too closely. Because I have a 100% stock portfolio, I don't need to rebalance, so I have even less of a need to look at it. And that will do it for another edition of Optimal Finance Daily. Have a great day. Thank you for listening, and I'll be back tomorrow as usual, where your optimal life awaits.